Hey guys, it's Michael. Welcome back to Boxmining. Today we're going to take a slight deviation from our normal crypto discussions and take a look at GameStop. This has been just blowing up everywhere on BBC, on Guardian, on CNN. Every news channel is talking about GameStop right now because the price of GameStop literally soared like crazy. So it has a ticker GME. It's traded on the New York Stock Exchange. It's a security for a company GameStop, which is really just a retail store for video games, right? Retail, used games, etc. Now, starting in this start of January, it was really priced at $20. Now it's at 347. That's crazy. The reason for really creating this episode, I'm well aware there's a lot of material on the news about this, on other YouTube videos, but I kind of wanted to give a crypto angle, I guess, because we're very related to how a lot of people, a lot of retail trade, and I felt it was kind of interesting to look at this case and take some learnings from it, because obviously similar situations can happen, and it also explains a lot about kind of institutional traders versus retail traders, which I found very cool. Now, in this episode, what we're going to cover is this whole event in full, but from two different angles, right? One from the actually not the retail, one from the institutional perspective. So this is kind of on the Melvin Capital angle, what they were playing, what kind of strategies they were deploying. And also, we're going to take a look at the retail angle, the Wall Street Bets, right? The organization of retail traders that are trying to look for an opportunity here. And we're going to take a look at both sides, and then we're going to draw some conclusions from some learnings. Now, obviously, this is not financial advice. I really wanted to take some learnings from this as an educational perspective and kind of some insight carrying forward both in the whole stock security space and also in the crypto space. So I found that's kind of the intention of creating this. Without further ado, let's get started. All right, starting off, let's go to the very beginning of the story. We'll start by looking at the institutional side and just really explain what GameStop really is. So, if you've been to North America, you've definitely been to these stores or seen these stores around major shopping malls. They just sell used games, right? So, people, if they take in used games from players who don't want to play those games anymore, they resell them. They also sell new games, they sell some toys, etc. That's kind of their business model. But this model is really going the way of a dinosaur, right? I mean, I think the kind of a good analogy for what GameStop is really like Blockbuster, right? Blockbuster, they were renting out movies. Uh, it was very popular in the 90s, but then obviously as digital distribution came along, their kind of business just died out. People didn't need to go to visit a Blockbuster to rent a game. Similar to video games are going for digital distribution. So now, say, for example, PlayStation 5, they have a digital only model where they no longer have CDs for games, right? They don't have DVDs or Blu ray discs. You just click a button, download, and play it. It's much more convenient. So, in many senses, they are facing a dying business model. They have to kind of just change and adapt to this current environment. Now, there are kind of strategic investment funds like Melvin Capital. They've identified that this GameStop, they're hit by coronavirus, they're hit by a dying business model. They might die out, right? That's a distinct possibility. So they've identified this and they decided, you know what? Because we think they're gonna die out, let's just short it. Let's sell them as much as possible. In essence, if you a short is when you kind of borrow GameStop from other, especially from the broker or from dealer, and you just say, okay, I'll borrow it, I'll sell it, and eventually I'm just gonna buy it back for cheaper and return it, making a profit on the downside, right? So this is when you benefit from something going down. So there was a huge short order placed by Melvin Capital. But I just want to say it's not just Melvin Capital. There's a lot of other traders who identified this and also just kind of joined the ride. Just press that short button. We think it's going to go down. Let's ride this wave out. Let's hope it goes down. Let's bet on a downward trend. So this has led to a situation where there was 140% of GameStop being shorted, right? This is like more than the entire market cap of GameStop itself. So there was a lot of it was insanely speculative, right? Maybe when first Melvin Capital, when they first started the short, it wasn't as insane as this. But as other copycat traders, they saw that this was happening, just do the same thing, click that short button. It led to a situation where everyone was doing the same thing. Well, what happens when everyone does the same thing? It leads to a situation where even though it might be the right decision, it leads them to a very bad position. It's kind of like the analogy for this is if you're playing a sports game or if you're playing a video game, a player can be out of position, right? They're they're not in an area where they're supposed to be. They're way too aggressive, way too extended, and this is very much a case where the short sellers for GameSpot was way too overextended. So that was kind of the situation. So I think at this point, let's take a look at the other side, right? So take a look at the retail side and the WallStreetBet guys and what these traders are doing. So obviously, they've identified that they found there were funds and there were capital management groups that were overextended. So obviously, what do they want to do? They just want to punish them, right? Obviously, you identify a situation like this and you just go in for the punish. And one of the kind of ways that it can punish them is by all buying the stock. And it means that when they buy it, it kind of drives the demand up and drives the price up, which causes the people who are shorting this to lose money, right? They've identified that if these people start losing money, there might be overly leveraged capital groups or funds or institutional investors that when they start losing money, they can't take that position anymore. They're going to be squeezed out of their position, meaning they'll have to buy, causing this cascading effect of GameStop moving up, which is exactly what we see right now, right? Like this kind of rise is because as GameStop keeps going up in value, right? People who are shorting it, they're going to have their positions liquidated, which causes a buy order on the market, and it causes more and more price movement on the upward direction, which is, I guess, if you're in crypto, we see this a lot. We see like both short squeezes and long squeezes, and there are kind of these big spikes up and down in crypto, and we see them almost every week. But this is very much an extreme example of this, where it just moved up very fast, very much because people were buying it and causing these institutional investors to start losing money and really getting totally wrecked. Now, is this all kind of something that's interesting is that it's not just, like I said, it's not just Melvin Capital. So it's obviously there were multiple institutional investors that copycat traded, and they have different points at which they will break, right? So that's why it's kind of like moving up in a slow motion and continues to move up. Something that's also interesting is that Melvin Capital, the guys who started this, they're kind of seeking additional funding, right? Because they don't want to get totally destroyed. If they can ride out, they know that if they can ride out this wave that's happening right now, they can still potentially make profit, right? If GameStop goes down and crashes in the next month or so, maybe that's their long-term strategy. But obviously, there are people who are not as lucky. Institutional investors are not as lucky, and they'll just lose billions of dollars in the process. So that's kind of what's happening right now. I know I went through a lot of the technical details of that, but in summary, big funds placed bet that GameStop was going down, and then retail investors saw that they were overexposed, in a bad position, way too aggressive, and then punished them hard for it. Now, this is, I think, very, very interesting because it goes to show that retail has a huge amount, just the average trader has a huge amount of influence on the market. And there's a lot of arguments that ensued, right? If you actually look at how this is portrayed in the media. It's like this kind of like I always laugh at this because it's kind of a portrayed as a David versus Goliath situation, retail versus institution, screw Wall Street. Whilst this kind of is true, it overly dramatizes, right? I mean, that's kind of something I've learned in crypto as well, where all forms of media overly dramatizes everything that's going on. I kind of feel like if you just break down to the basics, this is a very calculated play on both sides, and it was all about just like punishing people for doing the wrong thing. I think that's kind of the situation. There's also a lot of discussion about whether this is ethical or not, because one of the big arguments here is that GameStop by itself, right? GameStop has not changed in the time that you know this happened. If you look at it, GameStop did not suddenly announce a new merger or a new acquisition or something that would drastically improve their business model, right? This is a pure trading play, or the fundamentals of GameStop hasn't really changed and hasn't really adjusted to the new evaluation, right? So this means that GameStop is still trying to struggle and find a new way to keep these stores alive, a new direction of business. And it's very unlikely in this very short period of time that they can kind of 10x their profits or increase the growth to what this market's speculating. So there's a lot of speculation riding on this. And because this is a securities, as a stock, there are regulations against manipulation. Now, what's interesting about this type of play, I would say, is that it's very hard to pinpoint exactly who is responsible, right? If you look at the whole community of Wall Street Bets or TradingView, a lot of these are posted by anonymous accounts, and they'll claim, "Oh yeah, we just really like GameStop." You'll hear that a lot. "Oh, sure, we really like GameStop." Wink, wink. Yeah, get the picture. We're trying to screw over some people here. So I found that kind of to be particularly interesting. Now, coming to the end of the video, I think one of the biggest questions some of my friends asked me was like, am I part of this? Did I join the fray? Am I going to join the fray? The answer is hell no. So obviously, I missed out on this, right? I did not see. Looking back in the past is very easy. In fact, the top trading view comment is this one from calculated squeeze all the way back in August 27th when GameStop was $5, right? They're posting about squeezing, calculated squeezing, and posting about all this information. So that was kind of the best. That was the opportune moment. If you're looking for the opportune moment, that would have been it. But hindsight is 2020, and obviously, for me, I didn't. Yeah, I wasn't part of it. And being in crypto for such a long time and seeing so many rockets fly past, it's bound to happen. And it's actually pretty. Being coming to terms with not having FOMO is important for me at this current point. I mean, I feel like the people who got in early, obviously, they're making a lot of money. I mean, going from $5 to $400 is life changing for some, and I've learned to say, congratulations, right? That's a very well calculated play. You spot the opponent; they were over aggressive, and you punish them hard for it, and congratulations on your gains. So now what's next, right? I think that's kind of interesting topic, right? Because obviously there's talk about can this be applied to other stocks? So people are talking about BlackBerry now. Maybe it's going to be in the same situation where it's a lot of funds may be shorting it, and another future squeeze might be possible. Something I learned from crypto is a lot of times these strategies, they only work once, right? The second time someone tries to deploy this, chances of the same thing working twice is very hard. It just can't, life isn't that easy, right? A lot of times, I think what we're seeing right now is that a lot of these funds, the big funds that are shorting, they're being a lot more defensive, and they're kind of buying what they sold, maybe to kind of de-risk that position a little bit. So we did see some stocks even around games go up. So even like CD Projekt Red will be an example. They were moved up a bit, and it could be two reasons. There could be a hunt going on. At the same time, it might be that the funds who are out of position, they're getting into position very quickly, right? I mean, something I learned in this space is that because of how much money is on the line, everyone moves so quickly, right? In a blink of an eye, this whole game readjusts. So definitely very interesting to just watch it, I guess, to see it play out and to kind of take a few lessons from it, like the fact that the general public is very powerful, and it's important to have a strong understanding of the market and have this discussion so you can spot people who are out of position. I think that's also very interesting. And if you are out of position, identify when you're over leveraged. I think that's yet another big take home from this. I want to open the floor up as well to see what you guys think about this, especially considering that we're in crypto. We also see, kind of a lot more craziness in crypto. Like, I think it's a lot more transparent what's going on. And yeah, definitely hope you guys learn from this and can have a discussion about this. That's what this channel is all about. With that, guys, yeah, definitely leave it as this, and I hope you guys subscribe, and I hope you guys enjoyed the analysis, and I would like to share some discussions with you guys about this. So thank you guys so much for watching. See you next video.